operating your business as a sole proprietorship and thinking of forming an entity? Or do you have a structure in place, but you're considering another as your business evolves and grows? Today, I'm sharing scenarios from Nellie A. Kalp, the CEO and founder of CorpNet, to help you know if it's time to consider changing your business entity type. The first reason to consider forming an entity is if you're expanding your business by adding services or hiring employees. Proprietorships and partnerships do not have a legal separation between the owners and their businesses, so your personal assets are at risk of if the company is sued. If you're not comfortable with the lack of liability protection, an LLC might be a great first step to give you peace of mind. A second reason to consider changing your business structure is to have the most optimal tax situation. Sole proprietors and partners must pay self employment tax on their earnings, which can be quite hefty. An S corporation allows you to be paid wages that are subject to Social Security and Medicare, but the company pays half of the liability rather than you being responsible for the full amount through employment taxes. A third scenario to consider, a different business type, would be if new partners are joining your company. Entity types limit the number of owners a business may have and restricts who may own it. So, if you are adding owners to your business, you'll need an entity type that allows the flexibility you need. Another consideration when bringing on new partners is the personal liability. In a general partnership, owners are responsible for their own actions as well as of those of their partners. A fourth reason to review the correct entity type is if you're planning to expand into other states besides your current home location. If this is the case, you need to form a domestic business entity in the new state or foreign qualify there. You're considered doing business in another state when any of the following are occurring. The business has a physical presence, whether it's an office space, a warehouse, or a retail store in that state. You're conducting in person meetings with customers in your state, or you have employees living or working in that state. A fifth reason to consider changing your entity type is if you're ready to sell your business or retire. The business of a sole proprietor or a partnership ends when the owners retire or pass away. If the company is a legal business entity, you have the option of selling or transferring ownership. If business perpetuity is important to you, review which entity type is best for your situation. Now, remember that forming an entity or changing entity types can affect your financial and legal aspects of your business, and you may have additional compliance requirements as well. So be sure to talk to a business attorney and your CPA to understand the implications that entity formation will have on your company. If you need a referral to a business attorney or CPA, or if you have additional questions, feel free to reach out to us at 310-534-5577 or contact at abandp.com. We'll be happy to give you the resources you need to make the decision to find out which entity type is right for you.